From the Option Club. I am here with Dan Sheridan. Dan is back to talk a little bit more about calendar spreads. And basically, there are two ways I know of that work real well for losing money on calendar spreads. And one is if the price of the underlying moves outside of your expiration break-evens. But the other way is if implied volatility drops on you, if it falls on you. And that's what Dan is here to talk to us about. On your screen right now, you probably have a picture of a pretty looking calendar spread, which is actually a trade that I have on right now, but they don't always look like that. And when the volatility starts falling out of them, Dan's going to talk a little bit about what we can do to make things better for ourselves. So, Dan, I'm going to switch over and change the presenter to you. And all you have to do is share your screen, and we should be able to get going.
All right. Let's see. Let me know when you can see my screen. Let's see.
All right, your screen's up.
Okay, and let me just move a few things. Good afternoon, everybody. Hope everybody's doing well. Had the pleasure of being in. I know I was going to say you guys aren't a California-based group, are you?
No, we've got people from not only all over the United States, but all over the world as well.
All right, you're international. Well, I was in Chris Smith's backyard last week in beautiful Huntington Beach, California, with the surfing capital of the world. You go to 9 stores in the downtown area, and 9 stores are selling surfboards. You don't see that in Chicago. I don't know if there's a store in Chicago selling surfboards, Chris, but maybe sawed-off shotguns or something, but no surfboards or something. But glad to be here. What I thought we'd do today is more of a hands-on, walking through, taking a vehicle like IBM and walking through day by day and talking about calendars and talking about what are some things you can do. Sometimes I have students sometimes that feel dead in the water when a calendar comes and the vols go down or the price moves too far. Are there things you could do? And the answer is yes. Now, as Chris mentioned, showing his calendar, it doesn't mean that every calendar we trade, we're going to turn it into a positive one. You'll have losing months. But at least, hopefully today we can talk about a few things you could put in your toolbox that can help you survive, especially in an upward trending market where the volatilities are coming out. And I'm not sure if the next year will be like the last 9 months, an upward trending market, but and my skeptical side says no. But I think we'll talk about some things. So let me just talk for a second. You see the software. I'll just spend a minute going over the software. This is a software that we're coming out with in the next month. And it just, again, I just teach, and I think it's good analytical back testing type software that'll help you learn better, and that's so that's what I'm going to use today. And so let me just show Chris, can you see my cursor?
I can see it.
Okay, so here you have IBM. Here's the open, high, low, and where it's red, that's the price of the underlying. Here's the change, down 48 cents for the day, and we're at Wednesday, November 18th. Okay, so we're back in time, November 18th. This will be more information on the whole position. Days in the trade is DIT, a standard deviation, how far the position has moved since you put it on. You'll get some Greeks down here, delta, gamma, theta, vega. And again, what's red is the strike that is closest to at the money. And so we'll walk through this just day by day, and if you have any questions, shoot them in. Chris are you seeing Chris, do I see the questions, or are you seeing them?
I got the questions, and
just shoot them in whenever you
Yeah.
Whenever
And we'll either, I might stop you along the way, or we'll just save them for the end.
Yeah, so, again, the key to today is just try to give some ideas, walk through some calendars, give some ideas, matter of fact, we're in the middle of, almost through, I've been teaching a 12-week advanced calendar class, and I know there's a decent amount of students from the Option Club that have been in it. Hopefully they're enjoying it, and we've been trading through. This has been a great 2-3 month period. Wouldn't you say, Chris? I think the day the class started, the market started cutting loose. So, it was great to be able to put these calendars on. We've had lots of movement. So let's dig in here, and we're just going to go through. Hopefully, in the next hour, I'm looking at going through about 3 months of IBM, going through it. So let's start out. I'm going to sell 10 of the, I'm going to sell 10 of the December 130 calls, and I'm going to sell 10 of the December I'm going to buy 10 of the December 130 calls. We've got $1 commissions that will be figured into this. And again, it's tough. And Chris, you've seen it as pretty much as I'm saying it? Or
yes. No, okay. No, the screen refresh is real good.
Okay. So it's close of 128. Normally I put, again, I'm talking non-directional calendar. So if you put the calendar on, so I'm looking for calendars as monthly income, bringing in monthly income using calendars and many of the obstacles along the way. So, I like to start them at the money, but as of November 18th, if we're doing a 30-day calendar, and you can see me circling 30, okay, so it looks like it's going fine.
Yeah.
Okay. We're a little bit out of the money. We're doing the 30-strike calendar. I mean, technically, I could do, if I wanted to straddle the price, I guess we could do 5 here, right? 5 there, and something like this. This would be a double calendar. And that's something that would be more closer to delta neutral. Maybe we'll try that. So the stock's not at, it's at 128. There is no 128 strike. So let's just straddle it, start out, and we'll start our venture in life here. So this is called a double calendar. All right, single, double, doesn't matter. So why am I doing a double calendar? Just because IBM's not at 128. And if I did the 130 strike, I'd be a little bullish. If I did the 125, a little bearish. So let's trade it. Let's make a trade. And so we're going to commit the trade. And this is a calendar. And trade category, this is a calendar. And let's say our profit target, we want to make 15%. And the most I want to lose on this puppy, let's say, is 20%. Okay? And you save it. So, and if you look at this, do you see in the graph, the profit target and max loss?
I see it.
Okay. So you can see this is a $1,600 position. If you had an account at Thinkorswim or Option Express and you had 10 grand in there, they'd take out $1,600 for the trade. And we're looking to make 15%. This is a 30-day trade, 15%, or $247. And our max loss is $329 or 20%. So we have a plan on every trade, my profit, what I'm looking for, and a max loss. So, this is a business. It's not winging it. And so that's that. So let's walk through this, where some basic guidelines. Where do I look to adjust double calendars? So the first question, where do we look to adjust double calendars? A guideline for you is halfway between the short strike and break even. So again, we have a plan here. What are we looking to make? We're looking to make 15%. What's our maximum loss? 20. Where would we adjust the trade? Halfway between the short strike and break even. So let's just take the upside for an example. The short strike is 130. The break even's around 130, 179. Let's round it to 132. Halfway between 130 the short strike. And the break even, 132, would be 131. So we have a plan. On the upside, at about 131, right around this level, that's what I would be looking to do something. So we have structure. We're not winging it, right? So let's walk through this trade, and we'll go from there. All right. So Wednesday, November 18th. Chris, maybe this will give me an idea to see what kind of lag. I'm going to click. I'm going to click it. Let me know when you see the graph for the next day. I'm going to November 19th right now.
Okay, I see it.
Okay, that's a bit of a lag, maybe 4 seconds or something. I think I'm having some problems with my computer. It's not the software, and it's a little bit of a lag. I'm not sure. I'm having a pickle of a time figuring it out. But anyways, so we've gone 1 day into the trade, and you can see the red dot is where the price of IBM is, and this little area here, that gives you the range of the day. So you can see, I'll blow it up a little bit, that's the high and the low of the day. So we could go intraday theoretically and find out where we were, but that's some information there on the range of the day. So IBM, 1 day into the trade, we're down 2%, or $37 on our 1600 margin. And another thing we're going to keep, because this is a calendar discussion, is how much the IV, as Chris said, what's our biggest fear as a calendar trader? Number one, the price moving too far away from our short strikes, right? But number two, the IV going down. So this software will tell you from when we put it on what the volatility has done. And I'm particularly interested in my long options. So right now you can see my long 130 call in January is up about 4 cents, and the 125 is down about 18 cents. So let me give you a general guideline. When do I like to get in there and do surgery on calendars when the volatility goes down? Here's the answer. When the volatility drops about 7%, 7 to 8% or more on my long options, and we can put that in there, IV percent change from when we did it, when we're down about 7%, 8%, then what I like to do, and this is something we'll talk about, cut my vega in half or more. Everybody got that? So when the volatility on my long options goes down, that's what Chris said, when the vol goes down, is there something we can do? Yes. Attack the theta. Attack the vega, and I'll show you. But anyways, let's move on. So let's walk through this. So right now we're okay, nothing to do, right? We didn't hit our max loss. We're not down 15, 20%. We didn't hit our profit area, 15%. And are we anywhere near our short strikes or halfway between our short strike and break even? No. So we have a plan, right? So let's go to the next day. Let's go to November 20th, which is a Friday, and I'm there, right? Chris, do you see November 20th?
Now I do. Just ticked up.
All right, so we're at November 20th, and what are we seeing? We are seeing that the volatility is down almost 4% on our long options, right? So we're getting an indication. We've only been in the trade 2 days. Can you see me circling that?
I can.
So now we're watching this. We're seeing, you know, the markets, the vols are down a little bit. We want to keep an eye on that. We're long 62 vega, but we're in the middle here. You know, unless we get to these ends, the expiration break evens in a calendar near them, right? No problem, right? So there's no problem from a price viewpoint. Volatility's okay. Let's go to the next day. Monday, November 23rd, right? Monday, November 23rd, and, you know, I'll start saying, go ahead.
It just ticked up.
Okay.
Screen refresh.
All right, November 23rd, we are 5 days into the trade. the stock, this says the stock is up 0.02% standard deviation over the 5 days. Basically what that means is the stock's about the same place that it was, right? And here we're getting into the holiday season, November 23rd. We're down about 7% on our volatility. And let's give you other ways to look at that. If we look at original IV, the original IV on our long calls were 21 and 23. Can you see that, Chris? 21.
It's there.
Okay, and you can see where they are now, 19 and 21. So the vol's coming down. We're monitoring it. Again, is the price hurting us at all? No. No, we're 5 days into the trade. We're doing wonderful, but we're down 8% because the volatility is smacking us. Now, so this is a good spot to talk about what are some options that you can do when the volatility goes down, right? And first of all, we're in the trade 5 days, and the IV has gone down 7% in IBM. So what are some things we can do? And, you know, one of the things is on a double calendar, all right, we're long 65 vega, turn it into a condor, right? So what do? We can sell 5 of these, sell out our calendars, right? Sell those out, and Chris, let me know when you see it.
It's coming up real quick. All right, the whole trade's up right now.
All right, so if you see, the blue graph is our original graph, and the green one is our new graph. And if you look, same capital, right? So we didn't increase the capital. We took it from 1647 to 1668. We took our vega from 65 long to actually 53 short. So that's important with the Greeks. And again, I didn't have to do the whole thing. I could have sold out, you know, 2 or 3 of each of my long options, and that would have been more gradual. But I'm just showing you guys something. So I took my vega now short. My theta has increased. That's good. The only negative thing, my margin is the same, which is good. And my delta, though, has gone a little negative short, right? And I could always, if I wanted to, you know, I could always buy, you know, if I want to buy one of these little dinky calls here, or buy a call up here. Let's get the deltas in here. If I want to buy a call, let's see what this does to my theta. Not bad. So I can cut my deltas down a little bit, so I go from short 5 deltas. Do you see that, short 5 deltas?
See it?
And to short 18, so I took my deltas pretty much the same. My theta's gone up, but I took my vega short now, right? And that's, you know, it's something you can do, and it makes the graph look a whole lot better, right? So that's just an, you know, that's just an idea what you could do in a long vega position, right? What you can do as the volatility goes down. But here's the important thing. The key is that you monitor the volatility. So when do you do something? When the volatility starts declining, whether you make a move when it's down 5%, 6%, 7%. And then here I completely turned it into a short vega position. I could have cut the vega in half, right? But I condorized the entire double calendar. Now, you don't have to do the whole amount. I just thought it would be easier to show there. Everybody see that? So that's what I did. So let's do that. So we commit the trade. And let me know when you see the completed trade. Now, again, for newer people who haven't traded calendars, this might be a little hairy for you, but and this isn't something you have to do all the time. But I just wanted to, I know because the market's been trending up the last 8-9 months, and we've had a lot of students with live capital in calendars, and so these are some of the ideas that have helped them turn losing calendars, you know, helping them with them. sometimes. So, Chris, you see that?
Yep.
So we've turned the trade around, and then let's walk through another day. Matter of fact, I'll go a couple days here. So here we are. Let me know when you see November 25th.
Got the 24th. Okay, got the 25th.
So 25th, our deltas are 12 long, our vega is short, positive theta, and it looks pretty centered. Everything looks pretty good, and if you look at the IV percent change, the volatility is still down, and so but we're moving on. We'll go a little more through this. And again, here, you can see here, here IBM, I think the day after Thanksgiving, I'm at Friday, November 27th. Are you seeing that?
Yes.
We were down $1.58 that day. We're at 125.70. And a $1.58 move in IBM is about a standard 1.3 standard deviation. That's a big stinking move, right? And so far, we've been in the trade for 9 days, and that's the standard deviation we've been for 9 days. Let me just show you one other thing here. If you look at let me know when you see the price chart here.
See it.
So here's the price chart. Here's the day we put the trade on. IBM was 128, and we've been knocking on the door. So what this software does is draw a standard deviation, one standard deviation, and this is 2 standard deviation from the day we put the position on. So you can see as an income trader, anytime we get near a standard deviation, it's going to be time for some type of an adjustment. So this is a good visual. It draws a standard deviation from the day you put it on. Here's the break evens, and it shows you, where we're, where we're going on the trade. So we've been in the trade 9 days, ding, 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 and we're banking on the door down a standard deviation. So. All right. Right now we're long 63 deltas. Let's go another day. Monday, November 30th. Let me just go a few days here. Here we are, Wednesday, December 2nd, 2009. Chris, let me know when you see this.
I see it.
So again, we've been in the trade for 14 days. Now normally, how long do I like to be in calendars? Personally, I like to be in calendars maybe 14 to 17 days. If I can get 15% or so, I'm a happy guy. Here we're 14 days in the trade. I'm up $87, not as much as I'd like. And that's partially because we're in this trade, and the IV's been coming down, and that's hurt us a little bit. Stock has moved a little bit. But this is where we're at. We're at $87, up 4%. Let's go a few more days here. And if you look at this, Chris, let me see when you see Friday, December 4th. So here's Friday, December 4th. We've been in the trades. We've been in the
came up.
Okay. Can you guys see the software well? Everybody can see it? I mean, can you see does it come out pretty good on your screen, Chris? You can see the strikes and everything?
I can see it great. If everybody wants to, on their go-to webinar, they can raise their hand. If you can see the software and it looks good to you, raise your hand.
Oh, they can do that. Okay.
Yeah, they can, and they're doing it.
Okay, so they can see it pretty good?
Yep, they can see it, and I guess they like what they're seeing.
Okay, good. Okay. All right. So, again, in this typical trading, there's no, day by day you go through it, and these are the things, you can see just by me talking, standard deviations are a big part of daily trading. So, let's go another day. All right. As of this point, Monday, December 7th, Chris will let me know when he sees it. I'll update you on where we're at.
It's up.
All right, so let's talk about it. This is an $1,800 trade, and that's the most I wanted to put into the trade. And I think that's important for any plan. You know, some students will start with a $1,000 trade, but they know they're going to build it up to 2,000, right? And scaling works well in more of a volatile market like we've had. But here it was planned on about an $1,800, $2,000 trade, and that's it. So any adjustments or stuff, I'm staying around that 2,000 level. And here's what we're at. We've been in the trade 19 days. Now net in the trade, we haven't moved that much. We're down 0.18 standard deviation. But you know, we've moved down, and then we've kind of come back a little bit. So that doesn't tell the whole story, but that's net where we're at. Today, Monday, December 7th, we've been in the trade 19 days. We're at 127, down 21 cents, and we're up $189, which is 10% at 1806. Now, here's what's going through my head. And Chris, tell me, you do calendars, but here's the thing. Because, you know, I want to give you from a common sense what is a trader, and I'm going to ask Chris in a second his opinion, what he's thinking. Okay, we came into this with good intentions, right? We came into this, we wanted to make 15%. We didn't want to lose more than 12 or 20, right? And normally I'm going to trade 14, 17 days. So here I am 19 days into the trade, a little longer than I want it to be, and I'm up 10%, right? That's 10% in 19 days, almost 11%, right? And so my thinking is this. Did I want to get 15%? Yeah, but here's the other thing going on in my head, and we'll get Chris's opinion. I've been in this trade 19 days. This is the first day I've been up 10%, almost 11. I'm about 4 percentage points away from my main number, right? And 4%, you know, what, another 70 bucks? You know, and if I went back to zero, I would not be happy, right? You know, it'd be one thing not to be up 10% 5 days into the trade. I'm 19 days into the trade, right? I'm more than 2/3 to the way to my target area. And so for me, when I'm in a trade, when I start being in a trade longer than my expectations, I'm willing to maybe cut my expectations down close to maybe down 1/3, right? Now, will that affect my next month? Yeah, I mean, because ultimately what matters is, what do you make in a good month? Let's say we make $189 in a good month, right, for this particular trade. The bottom line is, in my losing months, I can't lose much more than this, or I won't have a business model. Chris, what would be your feelings as a calendar trader if that was your, you know, what's going through your head? If that was your plan, I forced this plan on you, but what's your thinking?
My thinking is the harder I have to work on a trade, the less I'm willing to close it out for. If I have 10% in a calendar trade that I'm working hard on, I'll close and I'll, you know, look to open another one, you know, for the next expiration and hopefully work less, you know, spend less time working on it.
So you might take it. So if you were going for 15%, you might head for the exit on this.
I'd be out of there pretty quick. I'd be happy with 10%.
Okay, that's my, yeah, and that's mine. So what's triggering me to maybe take profit a little earlier is the fact that I've been in it 19 days. I'm normally looking maybe 14 to 17 days. And again, I will go home and cry at the dinner table if I go back to zero, right? I won't be happy to be around. And I think that as a trader, you have to look at the psychological aspect, right? And it was very difficult for me over 25 years trading at the Chicago Board Options Exchange as a specialist. You know, it's not good when you see guys that are up in their profit area and lose it all, right? Then you start talking to yourself. And so as of this day, now we're totally centered, right? Here's the temptation. You're totally centered. But again, I look at this as a business. If I can make anywhere near 10% every month, you know, that's a heck of a return, right, over a year. And so anyways, but that's just from the practical thinking. We'll go a few more days here, but I want you to see from a practical, I think what's going on in the head, because you have to combine the rules and the guidelines with, street smarts and your sanity. All right, here we are. Again, we went one more day. Let me know when you see it, Tuesday, December 8th.
It's up.
And, okay, we're at 126.80. We're up $230 or 12.76%. Almost 13% of our 15. And if you look at our profit area, can you see that?
Yep, it's up.
So we're within $40 of our target. Again, if I had a student who was up in this area and then it went back to zero, we'd get the BB gun out. We'd get the BB gun out, because that's just not good risk management. Again, it's not like when I say, so we're in that area here, we can't afford to lose that, right? If I'm going to, and again, here's the problem. Here's the problem. We are long deltas, so if we go down a couple dollars, you can see we can dent this a little bit. But anyways, so that's the thing, and we would take it off. I'll just go one more day just because I'm more curious than everyone else. But now it's up 16%, but if we go intraday, let me know when you see this.
I see it.
Let me go intraday. This had a range of the day of 126 to 128. And let's say we were theoretically at the 126 area. Well, that would have been fine. We would have been about 11%. Can you see that?
Mm-hmm.
I just theoretically took it to, I changed the price to 126. I went intraday with this, okay? But either way, I think you guys get the idea. By the end of the day, it would be 16%. So let's just take this out and go to the next one. But I hope everybody gets, I think sometimes walking through day to day, you can get the thinking involved there. And again, this is one that if you look at from the, what's this? Let me see here. These volatilities have been down about 7-8% since we've been in it, and we hit our target, right? So the answer is, so the question is, do you have to get massacred every time the volatility goes down? No. Can you, is there a law in the state of California that you can't tweak the position? No, right? Now, California, they might have a law, right, Chris?
I checked, and I don't think we have one.
I checked. So anyways, so I hope that particular one helped. And, this is a month that the vols went down, and we just turned it, we had a plan when we were going to turn it into a butterfly, and we did. So let's do that. And how are we time-wise? Can we do one more month? Would that be okay? Or?
Yeah, no, I think we're fine.
Okay. Let's pick one more month, and let's trade through a calendar in IBM. And I think you just, by going through it, it just gets you more practice. And that's all this is. I mean, it's just practice, practice, and more practice. Okay, so again, now let's give another point. Let's say we got out of it. So the next question is, hey, Dan, when do you get back in, right? I'm a trader. You're an addict. We got to trade all the time. No. I want to be out of the market. My goal is to be in the market 14 to 17 days a month, out of the market the other 13 days. I want to be on the sidelines observing and relaxing, right? I don't want to be in all the time. So right now, as of December 9th, if you look at this, there's 37 days to go to expiration. I'm not going to do anything for a week. I'll just watch IBM, right? I'm not going to do anything. Why? I'll wait till my 30-day target. So I try to go into calendars around the 30-day market. You don't have to be exact, but the point I was trying to make is I'm out of the market, right? I'm not in the market. So, all right, now, again, we're in a situation we're not at completely. Do you see Wednesday, December 16th, Chris?
Yes.
And let's just start with a single, just for maybe folks, let's start with a single. So here, again, we're at 128.71, close to 129. They don't have a strike there, so we'll do the 130 strike. And that's a calendar. We're not completely centered at 130, but we're close to it. And let's walk through this month, okay? Let's commit the trade. commit the trade. This is a calendar. And we'll just do one more month, everybody. And we'll put our profit target at 15%. And this software, it includes all your adjustments, all your commissions, all your P&L. So it's a great tracker of your trades, which is nice. And then it can monitor them each month. So you can see they have different reports here. You see this, the reports? Chris?
Oh, just came up.
All right, so these are the different accounts. So OptionClub here, I clicked that. We've just gone through December. So December, we did the trade out of $1,806, commissions of 62, realized profit of 269, almost 14.89%, and it can monitor all your trades, and so you can keep track of that. So, all right, let's move on. Now, here's the plan here. This is a $3,400 trade, but I'm preparing to put in. I'm going to treat this as if I have double the capital, about 75, almost 35 and 35 is 7,000, because if it moves against me, I'll add more calendars. So I'm basically, this is a $7,000 trade in as I set my plan, and we'll go through that. All right, so let's walk through this. All right. So now, one thing, all right, let's walk through. So let's go the first day, December 17th. I'll go a couple days just to get the thing, just to save time. I'll get the ball rolling a little bit. All right, let me know when you see December 22nd.
I got the 21st. Okay. 20 seconds up.
Okay. So you can see we've been in the trade 6 days. And in 6 days, we're at 129.93. We're up 30.38 standard deviation, so it's up a little bit. And again, let's check our friend, volatility, an upward trending market. Our long options are down about 4%. Now, it's going to be a little worse on April because having an April-January calendar is going to be more long vega than if you had a Feb-Jan calendar. So our vols are down 4. So if I'm doing a more than a 1-month calendar, like this is a 1-month calendar would be Jan-Feb. The months are next to each other. If I'm doing something that's not a 1-month calendar, like April-Jan, there's Feb and March in between there. If my volatility is down 5%, I'm probably going to cut the vega. Okay? Let me say that again. If I said that if I have a regular calendar, like a Feb-Jan, and the volatilities are down 7 or 8%, I may start turning it into a condor. That's what I did with the double calendar. But what would I do with a single calendar, especially something like April-Jan, where it's more of a, I call these campaign calendars because there's more vega risk here. If I'm down 5%, what I'll do, and I'll just show you here what I would do. Here, if the vols are down 5%, they're almost down there. What I could do is I'll just show you a little bit. I could cut out half of mine. I'll watch my vegas 157. In a declining vol environment, what could you do to a single calendar? All right, let's watch. Okay, that's one idea, is that, let me know when you see that, Chris.
I see it.
Not sure let's see what I did here. Oh, you know what? I think I did this wrong. Wait a second. 5. Oh, I'm sorry. Sorry about that.
Hey,
I did something. 1 second.
I think you got too many.
Yeah, let me know when you see it.
Yeah, there you go. That looks right.
Wait, you know what? Let me fix this. Just one more tweak. that didn't do it. Let's see. Let me fix this and then I'll... Now, is this stuff you have to do all the time? No, but I just want to show you. So what did I do? All right, here's what I did. The volatility, and I'm just giving you an idea. So what's the guidelines? When you're doing like an April Jan, and again, this is more advanced stuff, but when you're doing an April Jan where there's more than, where it's not a 1 month calendar. What's a 1 month calendar? Jan, Feb. So when the vols on my long option are down about 5%, right, I could cut my vega down. Now, you don't have to cut it down all the way. I usually don't, but I'm just showing you here because it's easier to see. I'm just turning my calendar into a butterfly. Now see what I did here, folks. I basically, if you can see the graph here, Chris, I have the same expiration profit, right? And by turning into a butterfly, I cut my vega from long 157 to short 45. That's great. But here's the amazing thing. We cut our capital from 3,500 to 900 bucks, right? So we have a much better position for a quarter of the, almost a third to a quarter of the capital, and we took care of the volatility problem. See that? So that would be turning a calendar into a butterfly. And let's commit the, well, let's just do it here, just so we can go through, just for time purposes. It was declining. So we turned it into a butterfly, okay? And then we just go from there, right? And if we walk through, go through a couple days here, let me know when you see the graph.
I see it.
All right, we're up 10% on $900. See that? But again, we're not using anywhere near the capital that we had, right? Now, for beginning calendar traders that are listening, I know I'm causing you a headache by going through with this, but I'm just, and again, just trying to throw out some ideas down the road. If you're a new calendar trader, do you have to trade like this? No. Do you have to do adjustments if you're a new calendar trader? No. Is there very simple methods to do? Yeah. But we're just, this is definitely more advanced, and, I think there's a process with the calendars, but this is just some techniques you can use to survive in volatility environments that are decreasing. But let's just walk through this. So, and again, I'm winging this. I didn't prepare this ahead of time. I'm just going through this day by day with you guys and what I would do. So, Chris, let me know when you see December 28th.
It's up.
All right, we got a, as they say, what's that? Is that Houston? We got a problem here, Houston. Houston, we got a problem. We got a problem here. IBM's up $1.74. That's a big move for IBM. It's at 132.31. It's up a standard deviation and a half. This is what we moved to, and we're on the outskirts. This is the expiration break even when we get in this area here. Okay, but here's the wonderful part, folks. We're only down 6% on $900. This was about a $3,000 or $4,000 trade that we started. So we have plenty of powder, right? So what we could do here is, and we're short vega, what I would do, and again, I'm just doing what I would do. We're up at 132. We can add something at the 135 strike, right? And this might get more complicated than normal, but I'm just walking through this. Hope you can see that. I'm not rehearsed, just trying to see what we would do here. We're up to 132. We had a big move in IBM. That's $1.49 standard deviation. So what could we do up at this level? The nice thing is we've only been using a small portion of our capital allotted for this position. So, again, there's many things we can do. We can add a calendar. We can add, but let's just go up here. Let's say if we add another butterfly or add a calendar. Let's just see different things. What if we added a calendar, right? Let's say we added a calendar 3 times. Let's take a look at what that would look like. Let me put the whole thing on. That would be a calendar at the 135 strike. That would give us, that would widen out our break-evens on the upside a little bit. and cut our deltas down to 46, right? Or we could add another butterfly. And let's say if we're staying in the butterfly, or we could add another butterfly to do that. But let's just add 4. Let's say we add 4 calendars here. All right, so let me know when you see the graph, Chris.
I see it.
All right, so I increased the capital. Again, nowhere near the 3,000 or 4,000 that we started with. We're at 1,700, and we're just extending out the break even by moving. This is the butterfly, and we're moving out the break even. So let's just commit that trade and just walk through this and see what happens. And let's go to the next day. I'll go a few days here. December 30th, and Chris can let me know when he sees that. So again, just some ideas. It's more just showing you some things, and hopefully doesn't.
And 30th is up.
All right, so here we are, Wednesday, December 30th. We've been in the trade 14 days. We're up almost 0.8, not too far away from a standard deviation. So we've been up a point. We've been up almost a standard deviation in a declining volatility environment, but our vega is pretty close to 0. Again, we've been in the trade 14 days, and we're down $45, right? No big deal. But am I happy to be in a trade 14 days and not up any money? No. And again, IBM is showing some strength, right? And if you look at the price chart, let me know when you see the price chart. Anytime we get near 1 standard deviation as an income trader, we're going to run into a little bit of trouble, right? And you can see we've been in the trade 14 days here, and we're up around that standard deviation mark. Can you see that, Chris?
Yes.
Okay. So, all right, let's continue on the process here. And, one thing we can do, we're short some deltas. Again, we're at this, when we get near the expiration break even in this area. Let's go one more day. And it came back, right? So it came back a little more centered. And I'll just watch a few more days. Now here we are, just for perspective, and we'll talk about this a second. Monday, January 4th, right? Monday, January 4th. Chris, can you see this?
It's up.
I've been in the trade 19 days. In 19 days, I'm up 1%. I'm not thrilled, right? So this is a month where it's been more challenging. IBM has been trending up, right? We're in 19 days. We're up almost 0.66 standard deviation. And if we looked at IV changes on our longs, well, we don't have our longs in place. The April. Let me just see, for example, if I did, I think the day we put this on, which was, I just want to show you guys something, or talk about something. We put this on, I just want to make a point. Monday, January 4th, right? I'll come back there. Let's go back to, and we're almost done here. Monday, January 4th. All right, here's the day we put this thing on, right? Chris could remember this. Monday, or let me know when you see this Tuesday, December 15th, Chris.
It's up.
All right, I want you to remember the volatility of the April 130s was 19.96, right? So the volatility of the April 130s was 19.96. Remember that?
Got it.
We'll fly through. I'm not sure what date we got to here. I think we were 19 days into the 19 days left. All right. So Chris, the April 30s were 19 point what?
9.6.
Okay, so they're down, but not as much as they were at the original, right? In other words, when we started out, they were almost 20, and during the position early on when we converted into a butterfly, they were, it went down a little, it was down a little more, but we're still down. Volatility's still down, but again, we're only up $29. So what's my thinking? Hopefully my other income positions are working. Do I want to have my $1,700 or whatever committed to this. You know, we only got 11 days. Normally I close things about the Friday before expiration, so I don't have that much time here. So I probably would, you know, I might just close this out. A lot of it would depend on how my other positions. If I was up 8 to 15% on my other positions, I might close this thing out. But anyways, that's kind of, why don't we stop it at that point? Just hopefully that gave people some thinking on, you know, on the different type of trades and that, you know, every month do you make it? But no, but again, if you're making 12 or 15% and you can keep your losers pretty under control or not, you know, at the end of the year you'll have a heck of a return. So, Chris, I hope I didn't drive everybody nuts with this, but at least I hope I gave a few ideas on you know, what to do when the volatility start heading down. So I don't know if anybody's got any questions or.
Well, it's kind of interesting. I've been watching the questions come in, and you know, it's like hanging a shiny object in front of somebody. It's like they don't see anything that's going on except the shiny object.
Oh, okay.
I'd say about 80% of all the questions are either questions or comments related to the software.
Oh, geez. The software outshines the strategies. Yeah, the software's neat. Again, is a teacher, and that's all I do all day is try to help people, and we work with on live trades, and it's just, for me, having a good tool is paramount because it helps me. You know, if I'm going over, let's say let's say Chris had a rough calendar and I was going to go over it with him, maybe he had a losing month. Well, the only way you can help him is, to me, go over the trade day by day and see what he was doing and why he did it, and see what the market was when he was doing it, and to help him. And so that's really, you know, when I was a trader for 24 years at the Chicago Board Options Exchange or whatever. Did I have a back testing software? No. Because you know, you learn by doing. But this is you know, we didn't have this, right? And, you know, just like they use simulators in the Air Force, this is good to, I think it's very good to help people learn. I think because, again, you can, you know, as a new trader, you can go and, you know, trade a calendar. Think about it. If you want to learn a calendar and you go forward to trade a calendar for 30 days, it takes you 30 days. You know, with a simulator like this, you can go trade 2 years of IBM in a couple hours. With this software, you can do it probably less. And so you can get it under your, you can get these things in your bloodstream a little quicker. Now, it doesn't, I want to be clear here, being in a simulator airplane is not the same as going fighting an enemy in the sky, right? There's emotions and there's different, but I think it can help the learning process. So I'll just say this about the software. You know, right now since there's no calendar questions, right now we're looking in probably starting March 15th to distribute this in our community. I mean, for the people in the mentoring, that they'll buy it, and then if all goes well, after March 15th, for a couple months after that, the goal would be outside the community to sell it. So I will, you know, I'll let you guys know as soon as we have it for use. I'll be getting, you know, Chris will have a copy of this, so he can use this, and, you know, whenever he wants, as far as in the community, to keep you updated on it. But we'll keep you updated just for those who might be interested. It should be very reasonably priced compared to what stuff's out there, and, you know, it's just something to help you with your option trading. And one thing that helps now is that, you know, if you have your positions, a lot of brokerage firms don't keep track of your commissions and your P&L and all your trades. It's just it's a good tool for keeping track of everything. And so, any other?
Hey, you ready for a few questions?
They're option questions or software?
Well, I was going to, let's start with the option questions.
All right.
And because that's kind of why we started out here, and then if we have time, you know, we could talk about software. So I'm just going to kind of rattle through these. I've been trying to prioritize them as we go. We've got a question that if the volatility drops and you stay in your position, but the market stays within the break-evens, do you still want to get out? And I think I can't tell from the question whether they're assuming whether you make the adjustment or not. But I think perhaps what we could do to start out is if you're in a calendar and the market's still between your break-evens and the vols are falling, whether you want to stay in that or whether you want to make some kind of move at that point.
Well, again, I mean, the move is what we talked about. Yes, I would make a move. I would do what we did today. I would cut some of the vega out. In other words, instead, because the other choice is just, if it's between, if the price is behaving, but and usually you'll find that out, which is an interesting thing. In most cases, when you've been in a calendar and the vol's hammering you, you're not getting destroyed usually because the price is behaving, right? In not all instances, but some. But normally if the price is behaving, I don't get out of it. But more time than not, Chris, I will start cutting some of the vega out. I will start cutting some of the vega out as I'll be more proactive with these calendars. I don't just let the volatility destroy me.
Yeah.
I'm a little more proactive with these calendars, and I'll cut it. But no, I don't normally panic if the price isn't hurting me at all. But again, like we talked about in both examples today, my thinking is changing once I'm in the trade 18, 19, 20, 21 days here, right? And because again, I'm always looking at it. I've got my capital committed here. Could it be better utilized somewhere else, right? So that was kind of a long-winded answer, but
yeah. The one point I'll add to that is because I just want to make sure everyone's aware, that we're all on the same page. IV can hurt you. So if it's going against you, it can hurt you, and you probably want to be thinking about what you want to do in order to prevent it from causing too much pain. And I think you gave some guidelines, Dan, about 7%. When you see a 7% decline in implied volatility, that's when you start looking at where you want to go with the trade.
Well, you can be proactive. And again, remember, we're just talking the upside, right? The implied volatility is not going to, in 99% of the case, the option volatility is not going to decrease on the downside. So it's mainly the upside that we're talking about, just cutting the vega down some. And I think that's a concept that most calendar traders, 90% of calendar traders out there really aren't familiar with the concept, that if the calendars are on and the market's going up, that they can't decrease your vega. I mean, that's, you can be proactive. In other words, no one's made it, you didn't make a contract with the calendar that you have to obey and stay in the calendar, right? Change is good. And I think that's something we always did when I was trading down in the pits. We can, if the IV's coming down, right, we don't have to be massacred, right? So you have to be a little proactive on the upside in the market. And anyways.
All right, here's the next one. When you convert your calendar into a butterfly and reduce your margin, are you also reducing your profit target, or do you continue to base your profit target on the initial capital outlay?
Yeah, whatever at the I make a decision at the beginning what I'm basing my plan at, what capital, and I stick with that. Because again, it's so important, that this is run like a business, right? That, the bottom line is this. You cannot lose in your losing months much more than what you make in a good month. The math won't work at the end of the year. So, I look at my plans, and then every month I'm looking at what I make, right? And, if I make less this month, that's going to affect me the next month because I just can't. Again, if I'm making 500, 500, 500, I'm not dropping 1,000 or 1,500. The math is not going to work. So I'm making my plan off my original intended capital. So even if I decrease, let's say I decreased in the example, I decreased it to $1,700, $1,800, I'm still looking for, 15 or 20% or whatever the number is on the bigger capital. So if I choose to just stay with the reduced capital position, I'm going to have to make a lot more money on that calendar. So, but anyways, that's the.
This question kind of probably goes towards the software a little bit, and a couple of people have asked it. They want to know if the software is automatically accounting for the losses that you've taken when you make the position adjustment.
Everything's included. So every loss, every adjustment, all the commissions are all included. So when we made, when we were going through the examples here and we made adjustments, everything was included in the P&L. So what you're seeing the P&L is with adjustments, with commission, everything's included. So you're seeing the net number. Yes.
Next question: when you make the roll, from a double calendar into an iron condor, what are your management rules for the iron condor going forward?
Well, because it really, the position, and it's more, it was the iron condor in those cases that we were looking at looked almost like the calendar in terms of a price graph, not vega. But I would look at, let's just say for time purposes here, around the break-even level, around that area, same type of guidelines as the other positions. But again, it was the same capital, right? So it would be the same in terms of max loss, max gain. The only thing that would change when I turn a calendar into a condor, the max loss wouldn't change, the max profit wouldn't change. The only thing that might change a little bit is the adjustment point. But the adjustment point would be similar when it gets near the, near the break-even type levels. So it doesn't really change that much.
Someone's asking about your criteria for looking for calendar trades. I think we might have covered this in your last presentation, which is still on the website.
I don't mind answering it real quick.
Yeah.
I mean, if you guys want to write this down, and just real quick, give you an idea of as far as stocks that I would use for income vehicles in general, for calendars, stock condors, stock butterflies, covered rights, whatever you want. I'll give you a 2-minute how to find those vehicles, what I think would be good vehicles. And this is a quick and easy, and then you're done with it. So this is how to find stocks that I would do butterflies in, non-directional, income butterflies, condors, calendars, whatever. And let me just say one thing before I say that. Again, I want to be clear here. My burden is that people are consistent and make money, right? And it's the consistency. And so how I teach is that you're in 3-4 vehicles, right? Every month, right? And unless some major thing happens with the vehicle relative to the market, you're in them every month. And I think the biggest problem people make is they keep switching vehicles. I might do an IBM calendar every month, a Russell Butterfly, and an SPX Condor, right? Hear my next sentence. That's it. Well, Dan, that's it. What are you going to do next month? I told you. What are you going to do the month after? I told you. Because here's the magic. The magic is that if you stick with something, right? If Chris Smith sticks with, let's say he's doing a Rut Condor, and he sticks with Russell every month for 12 months. Let's say we have a gunpoint, right? And we say, Chris, you cannot get out of Russell. You're going to trade a Condor every month. You're going to stick with, some semblance of sanity in terms of how you're going to adjust. You're going to have a plan. So there's going to be consistency in methodology, consistency in vehicle, and Chris is going to do 10 grand every month. You know what you're going to find at the end of the year? Chris is going to become an expert on Rut. He's going to become an expert on how Rut moves. He's going to become an expert on the Condor. He's going to become a craftsman. And that's it. 99% of people that I meet, either through my community or of teaching or across the country, 99.9% of students, that if you ask them, or retail traders, hey, are you consistent? Are you consistent in what you're making over a year? Are you making any money? Out of the people who are inconsistent, it's always the same answer, right? I'll ask them, hey, did you stick with the same vehicle, same methodology every month? No, Dan. No, I lost. I didn't play this month. I switched vehicles. I did this. And I think once you settle down and get some vehicles you're comfortable with, right, the returns will come. So anyways, I didn't mean to give a Vince Lombardi there, but all right, so here's the criteria for picking income vehicles. Number one, as you lay on your pillow at night, what are five or 10 stocks that you would buy for little Susie's college? Or what are 5 stocks that you buy for little Susie's private high school education, right? So you're thinking of good solid stocks that they're going to be around, and stocks that you like. And so, Chris, give me a few, and maybe some of the students could pop in. What are some stocks that they don't mind buying over the next 2, 3, 4 years and hold on to it no matter what the market does? They like these stocks. Give me a list.
IBM, Caterpillar,
Walmart,
McDonald's. Need keep going?
Yeah.
ExxonMobil. Pretty much anything in among the Dow 30, I'd imagine.
Well, yeah, and some people say Apple, others. So the bottom line is, if it's stocks that you don't mind owning, what are you saying? If Chris is saying for his daughter's, education, he doesn't mind buying 100 shares of Apple for the next 3, 4 years. If he's going to buy 100 shares of Apple with no safety net for the downside, well, then I think he'd be apt to consider a defined risk spread, right? So you're taking away a little bit of the total fear of the downside. So A, stocks you like. B, take that list that we've come up with and let's filter them. Take stocks over 55, 60 bucks. Because if your stocks get too cheap, there's nothing to sell, right? So A, good stocks that you don't mind owning 100 shares in. B, filter them 2 ways. Number one, take stuff over 55, 60 bucks. And step number 2, all right, we're considering the downside. We want a high enough price, but we don't want stuff that's moving 90 miles an hour, right? So let's take stuff that has an option volatility maybe under 32 or 30. And that way you're getting the psychotics out of the way, because we don't want something that's going to move, and it's going to move at a real fast pace, right? So right now, as of today, whatever date we are in 2010, that would be my guideline. That would be maybe under 30, 32 volatility max. Stuff closer to 27, 28 is what I like. So again, we're giving you a criteria on stocks. I'm showing you how to filter them. That would be my list. And most of the ones that Chris mentioned are ones my students do on a regular basis. But again, familiarity. All right,
let's see. I just saw a pretty good one. Here's a confession. I won't tell you the name, but it's at least it's John, but I won't tell you John's last name. He says, I see my mistake from the month as I was more concerned with the price moving toward the break-evens on a single calendar and added another single calendar. While this moved the break-even out a bit, he increased his vega. Just what I did not want to do, right?
Right, and it's interesting. I have, I do one-on-one mentoring most of the day, and one of the students I have today, a newer student, that's what he did. He had a calendar on, and it went up, and he added another calendar. And then, he's a former NASCAR. He was in the NASCAR business, and so I think he got a little aggressive. As it kept moving up, he just kept adding into it. He figures if the vol goes down, I'll just buy more vol, right? I'll just average down, right? and he turned it into a pickle. But no, you don't want to, again, think about it. If the vol's going down, do I want to increase my vol? No, usually I don't, right? You know, unless you're really, really, really convinced the market's going to back off, but I don't want to bank on that. So, you know, generally you don't want to increase the vega. What I would rather do, for the gentleman who asked the question, Chris, you know, if you have a single calendar on and it goes up, instead of adding another one, just take the one off you have and reset it, right? That way you're not adding capital and you're not adding vega risk, but you're gonna increase theta. So again, what's another alternative? If you have a calendar on 10 times, it goes up. Instead of adding more calendars, take off your existing one and stick it at the money. And let me just say one other thing. Another little thing is, let me ask a question, folks. Just on the Greeks, and Chris could tell me when he sees something. Based on the Greeks, let's say you have no opinion on a stock. Based on the Greeks, if you have a calendar on, would you rather lean long deltas or short deltas? If you have a calendar on, you don't have an opinion, you're delta neutral. According to the Greeks, which should you lean, long deltas or short deltas? And let me know if you get some answers.
I'm getting short.
Yeah, short. Yeah, I figured your group would get all the right. Yeah, you want to lean short deltas because remember, here's an important point to remember. When you put a calendar on 30 days from expiration or 25 days from expiration or 35 days from expiration, take a look sometime at the beginning of a position and compare your vega to your theta. So when you start a calendar, you're 30 days from expiration, compare your vega to your theta. And what you'll see is your vega is a lot bigger than your theta. So especially your first week of a calendar, your vega is much more powerful to hurt you than your theta is to help you. So that's why you have to be on top of it. Doesn't mean you should be scared of calendars. Just know that you have some choices, and that even in an uptrending market, does calendars have to hurt you? No, no. It can be a pain, but you still can benefit.
All right. Mark is asking, do you adjust each position individually, or do you adjust an aggregate if you have multiple trades on?
Always aggregate. I don't. You know, to me, it doesn't matter. I mean, I look at the individual components, but I'm trading this as an aggregate, right? Aggregate. Yeah.
I think what Mark's probably driving at is sort of like what the Thinkorswim guys do, where they kind of beta weight their whole portfolio, and in other words, managing the aggregate of positions in your account versus the individual calendar spread, the individual iron condor.
Yeah, I don't do that. I mean, here's the thing. If I got a position in IBM, if I understand the question correctly, let's say I got a position in IBM, I got a position in Walmart, I got SPX, I got RUT, and I got something else. And I'm leaning two short deltas. Right, you could beta weight it, right? And then maybe go and spy and correct your deltas, right? Is it just being on the same? Okay, so yeah, I don't like that. I mean, my opinion, you know, again, does that make sense? It can, but it can, you know, I'm an income trader. I want positive theta. But will I normally do that? No. I just, from my experience and what I'm more comfortable with, if I got a problem in IBM, I want to fix it in IBM. If I got a problem in RUT, I'll go fix it in RUT. Because nothing works better on IBM than IBM. Nothing works better on Walmart than Walmart. And so to me, I just would rather, again, we're not trading, you know, in the monthly income part of the portfolio, just that piece of it. You know, we're only trading 3-4 positions, a lot of guys. So, I mean, I'd rather fix, I just think it's more precise to nail IBM. If I'm going to fix IBM, fix it in IBM. So is it wrong with Thinkorswims? No, of course not. But it's just, I'm just saying my preference.
I have a couple of people asking about where the ideal vega is. Both in the context of when you're opening a position, what kind of vega do you want, and when you adjust your vegas, what are you shooting for in terms of your vega adjustment?
I think as a guideline for your first year and a half of trading, till you really understand what vega is, I would just keep it simple. I would keep the vega always neutral to a little short vega for most traders, a little bit short. And I think that would be fine, because think about it, your two main risks as an income trader are price and volatility. And so as a new income trader, if you can keep the vega risk relatively under control, then all you're left with is the price, one guy. But I would always stay a little bit negative vega, just because, again, remember, if you're a short vega trader like credit spreads and condors and butterflies, the volatility has to go to zero at expiration. But if you're a calendar trader and the volatilities go down while you're in a position, they don't have to come up during the length of the calendar. So I think, normally I would recommend for traders in their first year, year and a half, till they really have a good understanding of what vega is, I'd be neutral to some short vega.
This is kind of related to this, or at least it's a good follow-on to it. If you cut the vega of your position by rolling into a condor, aren't you at risk for a volatility increase, which would then hurt your position?
Yes, you are, but the two things. You are, if the volatilities go up. But if the volatilities go up, I know as we get near expiration, they have to come down, right? They have to come down. And so I'm less concerned. That's why once I'm in a butterfly, it doesn't, they've got to come down at expiration. Whereas calendars, the reason I act early on and change the vegas, because they don't have to come back down, right? So even if I'm in a butterfly and the vols go up, they have to come back down as we get near expiration. So I'll get that back. At least that's my thinking.
Yeah. What I tell people is the vega, the implied volatility, can only affect the time value. And so if everything's in the front month, as like you have with an iron condor, once it hits expiration, the time value is all gone, and implied volatility no longer impacts the trade. You're just going to keep your credit.
Right. That's a better explanation than mine. Yes. Very good.
Yeah. Let's see. A lot of these we've kind of covered already. Here's one you're going to like, Dan. Dan, how do you become one of your students?
How do you become one of your students? Well, usually what I do is, again, this is, more what we do is we specialize. We have some classes that we've been, for people who are, there's two aspects. We have some classes, like, again, right now we're doing an advanced calendar class. We usually have a couple, like, courses that we'll have that will give people an introduction to what we're doing at a cheap, pretty reasonable level price. And then, but the whole main thing of everything we do is the mentoring. Even when the courses that we teach on our website, every dollar that you spend, it would get, like in a bank account, but it goes allocated towards the mentoring, so that you're not nickel and dimed. But to become a student, generally what I do is I have people just talk to me. So if anybody's interested, Dan at SheridanMentoring.com, and we just talk, because you want, the main things I look for with students is someone who's been doing it at least 6, 7, 8 months. Because how can you say you have a passion and you want to do this for, you really want to do this if you've only done it a month or two? So that you've been trading long enough, there's a passion, they want to do it, because that's the key thing I look for in students is students that really want to do this. They're not lazy, they want to do this, because it's, you're basically teaching people to do this for the rest of their life, and it's, it's like going to school, and it's everything we do is live trading. So anyways, just give a, if anybody's interested in even talking about it, or talking about what their situation is and what I would recommend, I'd be happy to help you in any way I can.
Okay, and also to the extent that Dan keeps me in the loop about these new courses that he's bringing out, like the advanced calendar course and anything else they come up with, I'm going to share that with everybody. You're going to hear about it through an email, or maybe we'll do some more online presentations. And so if you're looking for something like that, watch your email inbox, because we'll get that information out to everybody.
I appreciate it, and it just and I appreciate what you guys are doing with the Option Club, and that's really what I'm doing is just working with people very laboriously, one-on-one, on live trades, and in a community, just heavy live trading, for people who really want to do this, because folks, it's really a craft. That's all it is, and it takes a good year and a half to really start understanding it, but that's the key, to turn someone into a trader where they're getting consistent. It just takes, like any other field, cooking or law or anything, I would imagine, lots of practice. And it's a great profession, but I think if you understand that coming in, there's no get rich quick scheme, but it's a good profession. I've been doing this for 5 years, dealing with students all on live trades, and I love it. I mean, because you see a lot of students doing it, but it's it's a continual thing. There is no graduation from my class. There is no, you just keep working every month. We're an obsessed bunch of options traders trying to, constantly trying to build a better chair, whether it be a butterfly or a condor. But it's, as Chris can tell you, it's just that, for everybody, it's the consistency. And so, well, Chris, I appreciate you having me on today. Appreciate everybody listening, and hope to see you again sometime.
Well, thanks for coming online again with us, Dan. Maybe we have a lot of questions about the software, so maybe we'll talk you into coming back when the software is available, and
Yeah.
we can maybe do a little demo or something.
Yeah, in a couple of months we can come back, kind of do a demo of the software, show you, and go over it, and kind of go from there. So appreciate it.
All right, we're going to wrap this up. For those who are interested, I did record it, and we'll get that posted as quick as we can, probably the next day or two. And Dan, thanks for spending time.
All right, we'll see you later, Chris. We'll see everybody later. Thanks.
All right, take care.
Thanks.